Yo, what's good, everybody? I'm about to do a top-down analysis, starting from the monthly, dropping all the way down to the minute time frames. I'm gonna do this for the dollar, and I'm gonna do this for gold. I do this every weekend. It's my weekly top-down analysis, leading me into the new trading week. It helps me identify opportunities or threats in the marketplace, what I see could potentially happen, where I would like to see price go, where I wouldn't like to see price go, and just overall narrative starting from the highest time frame down to the lowest. So let's just jump right into it. Well, here we are on the monthly for the DXY, the dollar, and I can see that price was in a range for close to 2 years straight, and then we broke out of it, and we seem to be in a bullish expansion. We're showing some rejection, and maybe beginning to have a pullback. Draw on liquidity, if we are in a pullback, would be either one of these monthly inefficiencies, imbalanced price action, FVGs. We want to make sure that it is below equilibrium. So I'm just going to open this up, and I believe I'm just going to have to change the style, put the 50 on. So we can see that the more than likely, if this is a pullback, I would want to see a deep retracement into this inefficiency, the monthly fair value gap, coupled with or nested, as ICT says, with the inversion fair value gap. Now, it would be possible if price would redeliver price higher from this area, but I would not. It would take more confluences for me to be looking from longs from this area on the lower time frames than from this. But either way, what I like to do is I like to take screenshots, and I like to enter them into my journal and pretty much just write quickly what I just described here. So let me just jump over to the journal I created. So right here, I'll paste the screenshot and I'll say the same exact thing. We're looking at a bullish expansion, rejection, price has expanded out of the previous 2-year range. We are redelivering a previous month at the moment. Counter trend, we have rebalanced price range and inefficiency below, acting as draw on liquidity. So that's pretty much all I would need to do. So let me just, same thing, right? We have this sideways movement. We have this range that price was stuck in for 670 days, so about 2 years. And then we finally broke out of it with these three very impulsive bullish candles. We're showing some rejection here after rebalancing the price range, right? With these big wick tests, doji candle printed. Doji candle always, not always, but can indicate indecision in the marketplace. We have liquidity to the upside and the downside in previous month highs and lows. We're redelivering this previous month October 23 high with wick test from this as well. Draw on liquidity, as I stated earlier, would be these inefficiencies, this imbalanced price action, these fair value gaps below. And that's all for this time frame. So now what I like to do is I want to jump back into the charts. I want to go down a time frame to the weekly and see what I am able to identify on this time frame. Now, what you want to do is we're always looking for the types of draw on liquidity. So we're not on the daily, we're on the weekly. So we want to identify previous week highs and lows. So 1, 2, 3. So what I want to do here is identify that as a previous this week. I'm going to make that green. I'm going to drag that down here. So we can see that we are man, I hate when the annotation does that. We're redelivering this weekly inefficiency. IPA is just imbalanced or inefficient price action. So before I even knew about ICT, I learned from a different trader who traded very similar to it. It was called smart money trading. Don't know where he learned from. When he came onto YouTube and started posting on YouTube, this was after, he was asked if he knew who ICT was, and he said he did not know who he was, and that he did not learn from him, and that he did start checking out his videos, and that he did see the similarities in it, but that he wasn't sure. So maybe it was just a rebranding of ICT's concept. I'm self-taught, so I know the strategies, but I'm not the best with the language, the lingo of it. So you'll probably see me doing things and calling it something else completely. It's just how it is. I just taught myself, so it is what it is. That's that. But anyways, so what I see here is a bullish expansion with a pullback or correction, redelivering from this weekly imbalance. Draw on liquidity is below. Actually, this is kind of a little cluttered, so I'm actually really just going to take this away. Right? We have a previous week and a previous month that's acting as draw on liquidity. You can also say that this is a draw. Right? So same thing. Take my screenshot. Then I jump down back into my journal. I'm going to paste that. I'm going to write exactly what I see in bullish correction, continuation, question mark, because it's not confirmed. I'm not sure. So price is redelivering weekly IPA. Which is a breakaway gap technically. And then on the flip side, counter trend, their price redelivered weekly previous week, redelivered plus absorbed previous week high. The draw on liquidity below equals previous week low plus previous month low. Right? I gotta change. I gotta fix that. So we're looking at a bullish expansion, right? Market shift to the upside, and now we have a pullback or correction with a redelivery of this weekly inefficiency. We don't have any candle close through it. The wicks can always do the damage, so the wicks traded through it, but the bodies did not close through it. But we also have another doji or spinning top candle printed, which is another indecisive candle pattern where there's indecision in the marketplace. Liquidity to both sides in previous week, in previous month high, previous week, in previous low high, previous month low, in previous week low. And I'll have to go lower to understand this better. So same thing, switch back over to the charts. See, this does this sometimes. I don't know why it does this. So, okay. So we can see clear absorption of buy side, right? Stop orders were in the marketplace. People were selling. Stops were above here. You have breakout traders who were convinced that price was going to continue higher and probably smash through all these highs, but big time players in the market used all those opinions of us retail traders, and that's probably where they got in and absorbed the majority of the orders to push price lower. And you have this huge wick, premium wick. Next candle printed. It actually opened above, so it gapped up on the next daily open and pushed down with this big impulsive candle. Now if I was looking at this, I would consider this, believe it or not, a range, a higher time frame daily range, and I'll show you how I identify that. So you have, I like to use the line charts for identifying a few different things, but we'll just start with a range. So you had a higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? Pretty simple structure, right? I'm sure you all understand that. Here's when we had our first market shift where price traded lower, which created a lower high and a lower low. So you had a external break of structure and a lower low created, right? Lower high created, lower low, and if this was a continuation of a bearish reversal, you would see a lower high printed followed by another break of structure with a lower low. We didn't see that. We've seen a high created, smashing through the structure again, and you can see with this V shape right here that price is having trouble smashing through here. So to me, this is sideways movements. Can you see the difference with this nice uptrend here and then the break of structure and price having some support being found, having a little bit of turbulence? So I would actually identify all of this as a range. All of this, to me, it's a high time frame, daily range. Now, I have a lot of clutter on my charts because I have a lot of annotations, a lot of markups from previous weeks. So to your eye, it probably looks like a bunch of mumbo jumbo, but I do understand what's going on here. I probably don't need all of this, but it just helps me to, I can take days off the charts and just come back and just see, just have these visual cues here that help me just get back into the swing of things. You know what I'm saying? But anyways, so to me, we are in a range. I would call this a bullish higher time frame range. So bullish range, bearish pullback. That's a bullish range, bearish pullback is what I'm looking at. And price can do many different things. You have the absorption of sell side here, so I could actually come here and put something like this in. Just right. So you have that absorption, price pushed higher. We're also now redelivering. So it's not the cleanest price action, right? It might be a little tough environment to trade in if you don't know exactly what we're looking for, and if you don't break it down, kind of how I'm doing. So same thing. Let's get back here. I'm looking at a bullish range, bearish correction. Question mark, because it's a range, you can't be convinced. So on the bearish side, we have price redelivered. I cannot spell. Daily inversion fair value gap plus is redelivering a daily fair value gap now. Showing some, that's about it. On the bullish side, I want to identify that price absorbed sell side in recent swing low. SL swing low. It's choppy. It's not the cleanest price action, so I am going to I gotta go lower, but I'll explain it again. Bullish range, sideways. Looking at a bearish correction, which started from this redelivery of the inversion fair value gap. Price now is redelivering from this daily inefficiency, fair value gap. Absorbed previous day. On the other side, though, we had these last two bullish candles, impulsive candle that printed based off of absorption of sell side. So you had sellers coming into the market. You had people buying. Maybe stop losses were below here, as well as momentum traders who were trying to short as soon as we broke through. So that put a lot of liquidity into the marketplace. That's where big time buyers stepped in, absorbed all those orders, and there were no more people willing to sell, so price just shot up. Simple auction process. And now, like always, get back to the charts and let's go lower. So I believe we can get rid of this. I don't think I'm going to want this lower than the 12-hour time frame, to be real. We know we're in a range. We know what's going on. Clearly see that buy side was absorbed here. I'm not convinced that this is enough for me to say price is going to go short. Because if we were to, we have to take the equilibrium out. No, that is price was at a premium. This was invalid. Don't need that. Price able. Oh, okay. We have price which was able to redeliver this inversion. Actually, it's a reclaimed. So it's a reclaimed fair value gap. So you can reuse these levels, you can reuse these inefficiencies later on in price. So this daily level I don't need to see on the hourly anymore. I would like to see that. I want to bring this lower. Alright, don't care about this, get rid of that. Absorption of the previous day, we do know that this is a previous day high. I just did not mark it off on the higher time frame, which I should have done. And then it is Fridays. Okay. So we have that right there. So this is where it gets a little fishy. You have mitigation of this 12-hour order block, logical area. So mitigation of OB. You also can see how this would have been valid because we had that absorption of a previous week low as well as stops. So you have that swing point identified by these two candles to the right and the left having higher lows in this candle. It's a pivot point technically. I forget who invented the pivot points, but it might be Larry Williams. I'm not exactly sure on that. Don't quote me. I'm almost positive it was him who created the pivot point ideas. Something along those lines. He used to have an indicator when I was learning structure where I used those a lot. I believe it was him. But anyways, I'm getting off topic. So you can still see we're very indecisive. Price is really just, we're moving sideways, but and from this time frame we look more bearish. You have this double mitigation of this order block here. So price mitigated once, big push lower. The second time that price came into it, I call this a double tap pattern, where you can get two mitigations from one candle pattern. So you can get two solid entries from a candle pattern. I do not trade triple mitigations. So if it's a triple tap, if price were to come back into this candle a third time, I would assume that we would exceed this candle's high. I would not be looking for sells ever in triple mitigation. Now there are times where you can see triple mitigation, but they're very rare and not very probable. So if you're looking at these candles, these engulfing candle patterns, and you're taking entries off of them, know that the first tap is usually the best. Now and then the second ones do come, and they usually come pretty often if there is things like this where there's areas for price to absorb inside of it, to absorb orders to bring the market back in its intended direction. But the third time, I would not trade it. That's usually when you have people who trade these as they see more taps and they think that's more confluence. But in my eyes, I reverse that and I say there's more taps in one area, that's probably more liquidity built, there's more opinions built in the market that this is going to hold, and more often than not it won't hold, and more often than not it will exceed that candle's high slightly and then reverse. And I think that's what ICT calls turtle soups or something like that. I'm not sure, I'm not positive, but I just call it manipulation. and you can see that all the time. I'm not going to dig into examples of that now. Maybe I'll do a video in the future. If you guys want that, leave a comment. But yeah. So let me just finish some of these indentations. I want to let it be known that price is redelivering. This inversion fair value gap at this moment. Shown here by this this wick test from it. All right, same thing, right? Let's copy the screenshot, and if you guys are wondering what the shortcut is to copy a screenshot and not the link on TradingView, if you're using a Windows, it is Control Shift S. That is how you copy. So Control Shift S. You'll see chart image copy to clipboard, and that's how you can do that. And I will go to my journal and paste that into my journal now. Boom, just like that. And then I'm going to write what I see is a bearish reversal pullback. Price is redelivering from inversion fair value gap. Draw on liquidity equals previous day low plus previous week low plus break retest high time frame break retest liquidity pool. On the flip side, what do I see bullish, right? I do not want to only identify opportunities. You must identify threats. You must identify the threats, and they're almost just as important as opportunities in the marketplace. You gotta know what can go wrong, because anything can happen, right? Our job is not to predict. Essentially, it is to react, and by reacting, you have to be present and focused and understand what I just said previously, what can happen, or what you expect to happen, and also what you expect won't happen. I think I just messed that up. Who cares? I'm locked in. Let's put what we see bullish. So we see prices mitigating from 12-hour order block plus absorbed. I cannot spell absorbed previous week low. Draw on liquidity would be the previous day high. So let me explain that. Bearish reversal, pullback, price is redelivering from inversion fair value gap. The draw on liquidity is the previous day low plus the previous week low plus a break retest liquidity pool found on the higher time frame. On the bullish side, we are mitigating from the 12-hour order block. Plus, we absorbed the previous week low, and the draw on liquidity is the previous day high. So, what does that mean? To me, this big impulsive bearish move right here, 1, 2, 3, 4, 5, 6 bearish candles in a row, shows me a bearish reversal. And now we can see that price is starting to trend back up. So this would be a bearish pullback at this moment on this time frame. This time frame, right? And what I can see is that price mitigated from the 12-hour, absorbed the previous week low, as well as the sell side right here, and is trending higher. My draw on liquidity would be the previous day high, previous day high. On the sell side, draw on liquidity would be the previous day low, previous week low, break retest liquidity pool, as well as this previous month low that I did not write, but that's kind of far down there. I do not need to identify that at the moment. So, what do I do now? You probably already know. I go lower. So let's go lower. 6 hour. This looks like a bearish pullback. Possible bullish reversal. You have the mitigation of the 12-hour. double tap 6 hour. Double tap pattern means if you find a pattern on a higher time frame and you go down to a lower time frame and you see pretty much an identical pattern formation, that is a double tap, and those can be used for better entries and tighter stops. Now this also applies to inefficiencies. You can use them the same way. All right, and as well, the double tap has a dual meaning, like a lot of words in the English language. Double tap pattern is not only that, like going from a 12 hour to the 6 hour, it's also what happens when we mitigate. So on a lower time frame, when we mitigated from the 12 hour, we had a 6 hour order block print, right? So you had this engulfing pattern print with this impulsive price action following it, inefficiency left, and then price was able to redeliver, mitigate from the 6 hour and push price higher. You had an absorption of sell side. That would have been a reason to look for entries from here, because we know that price, especially in areas of reversal, needs this liquidity to push price in its intended direction. So in order to push price higher and get sellers out of the market, you had you had to absorb their orders. So there were probably people who were buying a little too early, stop losses under here, as well as momentum traders, sellers who've seen all this liquidity below and these swing lows and said, well, once price breaks through this swing point, I'm going short. And when they did go short, there was a lot of short orders in the market, and that's where big players, the longs, came in with deeper pockets and absorbed all those short orders, and there were no more sellers, and price pushed higher because of it. Now here you can see the opposite, where you had buyers coming into the market, and there would have been people selling with stop losses above here. So if they were stopped out, they would turn into buy orders. And same thing, you have momentum traders saying, well, when price breaks this, I want to go long. In this instance, it's looking like we'll probably see continuation because you have a candle close through the swing. Flip that, you have a wick test through and traded higher. We have a 6 hour inversion that also held price up. Followed by a 6 hour fair value gap, which will act like a draw on liquidity. If price wants to go higher, if price wants to come for that previous day high, right? I would want to see some type of liquidity absorbed. I would want to see it absorbed in order to push price higher. I want to see this rebalance slightly. This is what I would want to see to push price higher. Maybe even a little deeper. Maybe we go into the inversion, tap this engulfing pattern, which would be a double tap formation, a double tap order block, because we're coming out of the 6 hour, created another pattern, pushing higher. This is a higher risk entry though. So I would have to see added confidences and confirmations on lower time frames to get my entry off of this. But here's what I do. Same thing as before. I am taking a screenshot. I'll actually add some more annotations just to make it a little bit easier. Let's show blue box. Say we mitigated on a block. Double tap. On a block. Let's do 6 hour. 6 hour. 12 hour. OB. Right? That 6 hour double tap of the 12 hour. Mitigated. Absorbed. Pushed price higher. Impulsive candle. Fair value gap left. Draw on liquidity. Draw on liquidity. This that was invalid when price was coming there. I'm not sure if it's still invalid, but we'll give that a shot. So, same thing, screenshot, drop down to here, post that screenshot in, say what I see. I see a bearish reversal. No, bearish expansion. Potential bullish reversal. It's just too long. I'm gonna put. Okay, what do I see? Price is re-delivering a 12-hour IFEG. That's it. Bullish. Look at all the bullish confluences. Double tap of 12-hour, 6-hour logical area, also known as the order block, plus absorption, sell side, plus redelivery, version fair value gap, plus 6-hour left, draw on liquidity is break retest, which I did not put on the chart. When I go back, I'll show you where it is. Plus 6-hour logical area, plus previous day high. A lot of draws on liquidity higher on the dollar right now where we are. Okay, I'm actually just gonna go right to the charts. I'm just gonna go right to the charts and explain this a little better. So where's the break retest liquidity pool above? Let me show you. I use the line charts. This is how I find support resistance areas. So this 12-hour fair value gap actually would be exactly where I'd put that break retest liquidity pool. So you see this V shape that formed, price traded through it, traded again. When there's a gap between it, is high, low, that would be a break retest liquidity pool. So that's a draw on liquidity, support resistance. So people trade these and think these areas are the be all end all. For me personally, I look at that as liquidity being created in the marketplace, a lot of opinions being made by market participants, and that is where manipulation can be found. So I would not be looking for this previous day high to hold. I would be looking for this to be exceeded and either continue higher or be absorbed and reversed. But I would not be looking for shorts until I see this absorbed. But let's go lower to the 3-hour. Let me get rid of this. So okay, so you have mitigated of a 3-hour order block, logical area, beautiful trade, push lower. Price now, so here it is. Let's get rid of this. Let's get rid of this. We know that on the higher time, that's what that is. But on this time frame, price is clearly redelivering from a 3-hour fair value gap. Big impulsive candle though. Don't care about that. I do not care about that. That's pretty cool. Don't really care about this on this time frame. Let's make that a little higher. Clean this up a little bit. So yeah. You could even say that this is also a reclaim, right? So I could actually get rid of that. I wouldn't though. That's just too much. That's too much. It's unnecessary. This is fine. This is all I need to see. As well as this inversion, 3-hour inversion, which price may want to draw to. So this could be a potential draw on liquidity just from where we are right now. So I would potentially use this as a draw on liquidity. So if you notice, right, that 6-hour doesn't exist on this time frame. So I'm just going to go down one real quick. Yeah. So I actually want to do this. I'm actually going to create this, and I'm not going to have it on this time frame, but I will show it on the lower time frame. Let me just get lower real quick and show you why this becomes invalid to me, because of that double tap concept. That doesn't mean that it won't work, but more often than not, just makes things a little bit more difficult than it needs to be. So that looks to be invalid because on the lower time frame, there's nothing there. As well as this is a rebalanced price range already. So price may, not saying it will, may just continue higher from where we are. I would say forget the rest. Okay. So you might just see price shoot higher, manipulate, and come and fall lower. Or it may do something like this and come lower. But it's really not the time. This isn't the time frame I want to use for really entry analysis. I'm still just doing directional bias at this moment. I don't really care about this anymore. Get rid of that. So this is something I would say is re-delivered FEG. And I can't spell, but that's alright. I might just keep that here. Draw liquidity is above. Beautiful. Beautiful. Same thing, why this looks to be invalid to me. Same concept. Same concept. I do not see a double tap, a similar pattern on the lower time frame. So it kind of just makes me a little bit wary of it. The price may respect these swing highs and push price lower because there's a lot of liquidity built up below. Even though we are showing signs of a bullish reversal on the highest time frames, the monthly and the weekly, it is showing some strong bearish momentum. We've traded below the 200 EMA and having some trouble right now closing beneath it. We're sideways. This is where you can find trend reversals or continuation. It's just tough place to be trading, but same thing. I think this video is getting pretty long. Going a little too in depth, and I'm tiring myself out. I'm definitely not streaming gold. I'm definitely gonna shut this stream off once I'm done with this and do that analysis a little bit more quicker and more in my head, more in my zone by myself. But hope you're finding value. Once again, we are looking at a bearish pullback, bullish reversal. Price is redelivering. 3-hour FEG. That's it. On the bullish side, pretty much same analysis as above, as the 6 hour. So look, I can't even type right now. I got caps locked on. Same analysis as the 6 hour. Beautiful. Let's go lower. A couple more time frames to go lower, and this will be all done. I can chill and watch the games tonight. Who you guys got winning? Chiefs? Eagles? Who you got? I want to see that 3-peat by Mahomes. That would be wild. The crazy thing is, though, he's probably going to go down as the GOAT when it's all said and done, but you really can't call him the GOAT because he wasn't able to beat Tom Brady. He probably end up smashing a lot of Tom Brady's records, but the thing is, when he was playing, he couldn't beat Brady. It's kind of wild to think of. And old Brady, he couldn't beat him. It's just a weird thing to think. But he's doing, like, he'll be the only person to complete a 3-peat, I believe, which is wild. Anyways, I'm losing my mental capital. I'm getting off topic here, but it's all good. That perfect consequential encroachment. Pretty nice looking. I don't want to see this. I don't want to see this. Alright. Got a market shift, right? That redelivery. To me, this looks like a bullish reversal continuation. Oh, see, I'm tired. So this looks to me to be a bullish reversal continuation, as well as a power of 3 pattern where you had this accumulation, you had that manipulation, you had that displacement higher. Price kind of trending sideways. So let's copy that. Get into the journal. We have a bullish reversal. Continuation. Power of 3 pattern printed. Price is accumulating, leading into Sunday open. Buy side plus sell side available. What do I mean? Oh. Bearish is price redelivering 3-hour FEG. Alright. What do I mean? What do I mean? So you have this bullish reversal down here, right? Price corrected, pushed higher, and now looks to be continuing on this bullish reversal, right? Power 3 pattern form with this range, accumulation of buy side and sell side. One side of it was manipulated. This candle here, this engulfing pattern here, followed by this impulsive candle high, which displays price higher. absorbing now the top side of this range. Price may want to pull back a little bit before exceeding higher. We are accumulating, so I think they call this an inside bar, inside opening up inside day or whatever. I don't really care. It's just accumulation. Buy side is available in the previous day, and sell side is available in this low right here. So if I want to see price go higher, I would want this low to be absorbed and push higher. If I would like to see price push lower, I would want to wait and see the previous day high absorbed in some manipulation pattern formed either on this time frame or one time frame lower to push price down. That's what I'm doing. So essentially, I'm sitting on my hands until I see either from this point here. But we're not done. We have to go, you guessed it, lower. So I go down to the hourly. Yeah, look at this. So you have this pattern printing. We absorbed this buy side. Absorb that. I mean, why not? Why not just do it like that? Buy side. Buy side below. I want to push that to the right. Straighten that over a little bit. This doesn't need to be on the minute time frame now. If I'm going to hold that down like that, that can just stay on the hourly. You can see there is liquidity above, so we do have that, as well as a break retest liquidity pool above, which I'll show you just in a second what I mean by that. Show you how I identify that. I'll go by the line chart and see that we have support found here and here. I'll choose the lower one. And you can see that price is finding resistance. To me, that is money. That is actually where I want to see price trade through rather than respect long term. So we'll go right there. Exactly what I would do. So all of this leads me to believe that we are going to be trading higher. Look at that 6 hour now isn't invalid, because on this time frame there's actually, so to me it's now looking pretty solid. It looks like we might see sell side absorbed to redeliver price from this fair value gap higher. This potentially could be what I see. Right? Are we below equilibrium 50%? Yes, we are. Is this an optimal trade entry? Yes, it is. If I were to come here, you would see that it probably lines up with the 618. Well, let's go vision node. Yeah, it lines right up with the 618. The very beginning. So that all lines up. All of it. So, you know what I'm looking for? We go down to the journal, paste my screenshot, and identify what I see. I see a bullish expansion, pullback, area of interest in 6 hour double tap 1 hour FVG for price delivery higher. Draw on liquidity equals previous day high plus break retest pool that we identified. Plus fair value gaps above. And now as we're getting lower, there is really nothing to say that's bullish besides price absorbed buy side. That's it. What do I mean? bullish expansion, market shift, right? Seeded these highs, impulsive bullish candle and closed through them. Didn't wick through them. We have a candle closes through them, right? So that's displacement. That's real displacement. Area of interest for price redelivery higher, meaning we have our drawn liquidities in the previous day high, this break retest level. Well, where is price going to get that volatility from to push price through that? I believe would be here. I would like to see price redeliver into this 6 hour, double tapped into the 1 hour, and push price higher. This is how I would like to see price redeliver higher. I wouldn't want to see price slowly grind up. I would want to see it absorb some sell side and push price higher. So that's how I'd want to see it. You can see how this, and I wouldn't want to see it go too low because there is relative equal lows below, right? So if we do get that slow grind up to exceed these highs, I would actually look for a manipulation pattern to form where to take the dollar lower over the course of this week. But that's it. I'm going to say, how might we explore this? Sit on my hands. If price absorbs sell side first, then look to hunt for longs inside 6 hour, 1 hour FEG. If price absorbs buy side first, then look for manipulation pattern to form on lower time frame to take price lower. That's it. That's all I'm waiting for. That's all I'm doing at this point. What are we unsure about? I am unsure of how price will redeliver can't type, man, tired. Unsure of how price will redeliver. Will buy side or sell side be absorbed first? Right? What are we unsure about? How could this fail? If I stick to my trading plan, strategy plan, I will not fail. What are the drawbacks? There are no drawbacks to sitting on my hands and practicing perfect patience. Done. I can't even type. I don't even care. What related ideas support for this hypothesis? I don't really feel like doing that. It doesn't really matter. Action ideas and notes. That's if there's like news coming in or whatever. I'll probably fill that out later. But I'm tired. This is a top-down analysis. This is how I go about it. If you found any value in this, hit the like button, hit the subscribe, hit that notification buttons. I go live every weekend doing top-down analysis. And I also go live every single day around 7 p.m., 7:30 p.m. Eastern time, right before the Asia Open, doing the same thing, top-down analysis. And if I do find opportunities, I will trade that session, but I will only trade gold. I do not trade any of the indices during Asia session. I only trade gold, and that is based on the fact that China has been one of the biggest purchasers of gold over the past few years, increasing their stock by 10 billion bullions, I believe they're called, alone just in this past December. So my idea behind that is that people are awake during Asia session, and that is when they're trading. That's when the Chinese bank are doing their transactions. So I've found success. I found good volatility, and I enjoy trading gold during Asia session if the opportunities present themselves to me after doing my top-down analysis. But either way, yeah, I hope you guys like this. And until the next time, peace.